This is one of the most misunderstood areas, I think, of estate planning for a lot of our clients. And the problem is they are similar ideas with similar wording, but they are very different in how they are carried out. And I think it's important to understand the difference between the annual exclusion and the lifetime gift exemption, because ultimately there is a way to reduce your estate annually, especially if we fall into some of these lower estate tax exemptions, that is really a free transfer. I hate to say in one sense it's a free gift from the government, because in essence it's your assets, and you are trying to move them to future generations. But the truth of the matter is it really is a resetting free gift. And I'm talking about the annual exclusion. Every individual who's a U.S. citizen can give any other individual $15,000 a year free of any gift, estate, or income tax incidents whatsoever. So I always tell clients that the next 100 people that walk past the building, you could hand each one of them a check for $15,000. And as far as the IRS is concerned, it hasn't impacted any of your other tax exemptions that are out there. And that's the annual exclusion. Married couples can give up to $30,000 a year to any individual, double the 15, even if the gift comes from only one of the spouses. There has to be a consent from the other spouse. But in that case, you can give up to $30,000 a year to any individual. So in a case where someone has children and grandchildren, you can really transfer a meaningful amount of assets from the senior generation to the junior generation, free of any tax implications at all. And you can even set up trusts for children and grandchildren to receive those gifts. So if there's a concern about a child or a grandchild not being ready to handle the receipt of those funds, there are trust structures in place that can make that work. So it's a really good tool to utilize a free gift where someone has concern about estate tax exemption, and they can move assets to the next generation in a meaningful way over time, but also in a way that has no impact on anything else. That's different from the exemption. As Sherry said at the beginning, you have an $11.7 million federal estate tax exemption and also federal gift tax exemption. Combined for a married couple, that's $23.4 million. If someone gives $1 million away to someone other than their spouse, because there's an unlimited spousal for U.S. citizens, then your estate and gift tax exemption is reduced. So if you gave away $1 million and forgetting the annual exclusion, your $11.7 million exemption when you die is now $10.7 million. So that's the exemption. You actually are paying a federal price for giving away large sums of money by not having the exemption when you later pass. Now, the IRS has said if they lower the estate tax exemption, if you make a meaningful gift while the exemption is 11.7 million, they will not claw back tax if, for example, the exemption reduces to $5 million. But you have to give enough money away now to basically wipe out what the new exemption might be. So this would only be for people that really wanted a gift, probably 8 figures to make that worth doing. But that being said, those large gifts do have a negative impact on your exemption when you die and allow you to give away less free of tax during your lifetime. The $30,000 per married couple, $15,000 for an individual gifting strategy is, again, every January 1, that number resets. And it is indexed for inflation. It started out at $10,000 back in the early 2000s, and it has crept up to $15,000. They index it for inflation every time it moves up $1,000. So we can envision at some point in the future that 15,000 becoming 16. And that seems to have, every few years, it seems to bump $1,000. But if you're inclined to give money to your family, if you have a potential taxable estate, you are absolutely leaving money on the table if you do not come up with a strategy to give away these amounts to your family every year. And it's a use it or lose it. So it can be a way. In a 10-year period, you can move a fair amount of money to the next generation without any tax implications at all.